Hello guys, welcome to our YouTube channel Stocks for Everyone. In this video, let us look at the fundamental analysis of Lancer container share. At first, let us look at the maximum chart pattern. Though this stock is listed in NSE2 from past few months, I am showing you the chart of BSE so that we'll get a clear picture of this stock. So in the maximum chart pattern, you can see that this stock has generated almost around 9,400% of returns. And then if you look at the market cap, it's still 750 crores. So being a micro cap stock, generating you over 9,400% of returns is really brilliant. And then, but the one thing that you need to understand here is its volatility. So even though these lines look very small, the prices action will be like very big. Okay, so if you look at here, it was almost 37 rupees on December 1 2017, but if you come over here, it's almost 9 rupees. So you see the fall, and also it's 2020, so in 3 years it had given you almost around 70% of negative returns. So you need to bear this kind of volatility. Only then you need to enter into these micro cap stocks. Okay, and then now let us dive into the actual fundamentals in the screener website. Here it is. I have the Lancer containers open in the screener website. So if we look at the about section, you'll get to know that it's related to trading activities like trading of containers and this kind of things. So it's basically like you can say as exporting and importing like that. But to get to know clearly about this Lancer containers clients or their actual functionalities and all, we need to go to their website and then look at in their client details and all. So maybe that I can't show in this video as the video will be long, but anyway I'll be putting it in the comment section below or in the description below once I get the time. So if you go here, you can see the market cap is just 750 crores, so it's a micro cap stock. And then you can see the stock P is 20 and the industry P is 19.8. So it's actually fairly valued. You can look at the ROC and ROE. So ROC is 44.5% and ROE is 47.5%. So being a small cap stock generating you 45% of ROE and ROC, then it's really brilliant. And then if you look at the debt to equity, it's 0.6. So I consider all the stocks to have debt to equity below 0.5, but it's not a sin if the company has more than 0.5 or more than 1 debt to equity ratio, but they need to be able to use those debts for the company operations and generate the profits. That is when you can say they are good stocks, because one or the other day they'll decrease their debts and show their performance when it comes to their operations. So this is one key point that you need to know. And then the dividend yield is 0.07%. So it's not a considerable dividend, but even then they are at least giving you 0.07% of dividend. And then there are no pledge. So for a micro cap stock to be a no pledge stock, then it's a very good thing. So now let us go to, okay, you can come over here and look at the pros and cons. So, and also one more thing, these pros and cons are system generated. So if you even go to ICICI Bank or HDFC Bank stock in the screener website, you would see the pros and cons generated by system. So you can't say those stocks are bad, right? They are very good stocks. You can see 74.8% of CAGR in the last 5 years. So it's simply brilliant. And then you can see the ROE and then its median sales growth. So you can see that the stock is heading towards the right direction. But this is just a hint, so you need to go down below and see its sales and profit percentage. And here you can see its peers. Let us directly get into its latest results. So I think the latest result of June quarter is already being covered in our quarter on results video. So I'll put that video link in the description below, so you can go there and check its later quarter on results too. So it will be kind of repetiting if I cover the June quarter results or year on year quarter results in this video. So let me directly go to the year on year. Okay, so you can see we have the data from March 2012 so to March 2022. So you can see sales from 5 crores, it has gone up to 595 crores in March 2022. So this is a whooping 100 times. So this is simply brilliant, and you can see every year it has grown. So this is what we expect a stock to be, right? So you can neglect the TTM part, so you can concentrate till March 2022. And then the operating profit, so previously they were not able to make their profits, so do the sales and it was going in vain because of the expenses. But then they started to make profits, and you can see the profit. So it's been consistent over the couple of years. So from 0 it's now to 60, and you can see the consistency. Every year the profit has increased. So this is really impressive. But here you need to note that the operating profit margin is not consistent, or it's not growing. So it's like varying every year. But even then, as long as the company is making profit, I don't think that will be an issue. At least for me, it's not an issue. But I don't know about others. And there are no other incomes, so it's good thing. Or else they'll simply add up, and then you see the large numbers down the lane at the bottom line. So it's good. And then the profit before tax, it's exponentially increasing every year, and it has already impressed me. And then you can look at the same thing in the net profit. Now here you can see the sales growth, and then the profit growth, stock price CAGR, and return on equity. So you can observe this, all the figures are simply brilliant. Yeah, and here we see the reserves and borrowings. So you see the reserves is 40 and the borrowings is 42. So this is a problem. So if the reserves is 40 and the borrowing is 4, then I'll be happy. But as long as the borrowings is greater than reserves, I don't think I'll be in a better position to say that this is good. But even then, if they're making the profits, so it's not an issue. So we saw how the profits of this company is increasing every year, and it's really brilliant. And you can see that this stock has a net cash flow of 28 crores, so this is also good. And then here you can see the shareholding pattern of this stock. So in the June 2022 quarter, the promoter holding is decreased by 6%. But hold on, you need not worry, because FIS have increased the percentage from 6.63 to 13.60. So this is really good, and you can see how the FIS are increasing in every quarter. So it was 0, and then in the September 2021 it was 0.56, and then in the December 2021 it was 4.31, and in the March 2022 it was 6.63, and in the June 2022 it's 13.60. This is really good, and we don't see any interest coming from DIS. And then the public shareholding is decreased. If you see in September 2019 it was 25.56%, and from there it's now decreased to 22.39. So this is also a good sign. So to conclude, this stock looks really good for me, but also I'm giving you a disclaimer that I'm not advising you to go and invest in this stock. Please also do your own analysis. So this was only for the education purpose. So this is it guys for this today's video. So if you want us to cover any of your favorite stocks, then please put it down in the comment section. And if you have not yet liked the video, please hit that like button, and also don't forget to subscribe to the channel. Thank you.